Welcome to the auto insurance chapter. This is a relatively difficult chapter for your test. It's very nuanced and you might want to take some notes, especially in the beginning. For the beginning, I'll primarily be using the whiteboard and not so much the PowerPoints because it's difficult to learn this in sections. You kind of have to learn it all together, similar as homeowners and dwelling. So let's see if you can name any parts of an auto policy. What I'm going to do is I'm going to list them, then I'll turn on the PowerPoint because my handwriting's so bad. Then we'll talk more about them. So one part to auto insurance is known as liability. In Texas, the state minimum limits are 30, 60, 25. Liability encompasses bodily injury and property damage. If you remember from the very beginning, anytime you hear about liability, it pays claims to a third party. So if you get in a car accident, the liability portion of your policy pays the other guy that you hit. You have to be at fault for the liability to pay out. Another portion of an auto policy is known as uninsured motorist. This is an important one on your test. Uninsured motorist is also just known as UM. Uninsured motorist pays you if somebody hits you and they don't have insurance. So if somebody hits you without insurance. Uninsured motorist also covers you if somebody hit and runs you. Your uninsured motorist limits are typically the same as your liability limits. Another portion of the policy is underinsured motorist. Underinsured motorist, known as UIM, pays you if somebody hits you who doesn't have enough insurance. I'll explain that in a little bit. There's also medical payments and PIP. Medical payments and PIP, known as personal injury protection. Remember, I'm going to put up a PowerPoint in the middle in a minute with all of this information. I have awful handwriting. Medical payments and personal injury protection, PIP, pay you. This one pays you as well. This one pays you as well. This one pays third party, the other guy. Medical payments and PIP cover your medical payments if somebody hits you with a car. Medical payments is $1,000. PIP is up to $2,500. These are the minimums you can purchase. In the real world, you can only get medical payments or PIP. Medical payments will only cover your medical bills up to $1,000. PIP, however, covers medical bills. PIP can also be used for funeral costs. PIP can also cover loss of income up to 60%. PIP can also be used for essential services. So like if you get in a car accident and you break both your legs, so you can't walk your dog anymore, PIP can be used to hire a dog walker or hire a chef or hire a shopper. PIP is better than medical payments, but it costs more. Then you also have comprehensive and collision. A lot of people think that these are full coverage. That's what they usually mean. Comprehensive and collision fix your car if something happens to your car. Comprehensive, also known as other than collision, fixes your car if it hails on your car, or if your car gets burned in a fire. Comprehensive is typically the not at fault accidents. Comprehensive is if you strike a deer, because deers and animals that you hit are not your fault. They just jump in front of you. Collision fixes your car if you have an at-fault accident. So for example, if you're driving your car and you rear-end somebody, you hit the guy in front of you, property damage fixes the other guy's car. Collision fixes your car because you were at fault. These two are the ones with the deductibles. Let's just say it's $250 because that'll be a test answer in a minute. So collision fixes your car if you hit something. Property damage fixes the other guy's car. Let's say you're driving your car and it's late at night and you hit a house. Collision fixes your car. Property damage fixes the house you hit. Let's say you hit a guardrail. Collision fixes your car. Property damage fixes the guardrail. Liability is actually the only part of auto insurance that pays other people. The rest of the policy pays you and your stuff. Comprehensive is the not at fault. That's like hail or fire damage. Collision is the at fault. So let's say you're driving your car and you hit a pothole and you damage your car because of the pothole. That's collision because you're supposed to be able to dodge the pothole. But let's say you hit a deer. That's comprehensive. Now let's say it's a dead deer on the road. That's collision because you were supposed to be able to avoid the deer. Alive animals you can't really predict, so that falls under comprehensive. Now let's say a rock comes off of a dump truck and puts a crack in your windshield. That's comprehensive. It's not your fault that a rock hit your windshield. So comprehensive fixes your car if you're not at fault. Collision fixes your car if you're at fault. Uninsured motorist fixes your car if somebody hits you who doesn't have insurance. Uninsured motorist also covers your medical bills if somebody hit and runs you. Uninsured motorist has a $250 deductible. So like let's say you don't have comp and collision and you leave your car on the side of the road and somebody sideswipes it and they leave. Uninsured motorist still covers that. The cool thing about these parts of your policy, they also cover your medical bills if you're struck by a vehicle like you're running. So let's say you're going for a jog at night. Even though you're not in your car, if a car hits you, you can have your uninsured motorist, your underinsured motorist, your medical payments, and PIP can cover your medical bills if a car hits you. Let's say you're riding a bike to work instead of driving. Somebody hits you on the bike. This portion of your policy also covers your medical bills. So it's really cool that your auto insurance not only covers you if you're in the car, but also covers you if you're hit by a car in any scenario. Liability pays out to the other guy. The rest of the policy covers you. Now you might have known that I left off rental and towing. I'll briefly talk about it super quick, but it's low priority on the test. Rental reimbursement, the minimum you can get is $2,600. That means it'll cover $20 a day for a rental car, up to a maximum of $600. Rental reimbursement is only good for 30 days. It's not supposed to ever go over the 30 days. So you can only buy it in 30-day divisions. So like if you get a rental policy of $30, then 30 times 30 is $900. If it's $40, then you have a $1,200 cap. Rental reimbursement will give you a rental car if you get in an accident somehow. Towing the minimum you can get is $75. Towing will tow your car if it gets in an accident. You can file under your auto insurance. I'll give you a quick piece of advice. As an agent, when you sell somebody rental reimbursement or towing, always give them good limits, like at a minimum $40, $1,200. Because when a person gets in an accident, they're going to remember the rental car that they had. If you only give them one that gives them a super small car, and they're used to a big SUV, because you didn't give them enough money, they're going to be really mad at you. And rental and towing is very cheap to add onto a policy. So definitely give them good limits here. Don't skimp out. It's like $2 extra a year. So don't skimp out on rental and towing. Now I'm going to put on the PowerPoint, and we're going to talk more about these, because this is very important for your test. So we're going to go through the parts again. Liability pays the other guy. The rest of your policy pays you and fixes your things. Now we're going to start at the top and work our way down and go in more in depth. Personal auto insurance uses something called split limit. Split limit means that you have different limits for different things under the policy. In Texas, the minimum is 30, 60, 25. That means $30,000 per person, $60,000 per accident, $25,000 property damage. So if you're driving your car and you hit somebody, if you have these limits, the maximum one person will get for bodily injury is $30,000. The maximum total that it will ever pay out is $60,000 bodily injury. So I'll give you an example. Let's say you hit a car and there's 4 people in the car. So you hit this car, there's 4 people in the car. You injure the first guy for $45,000. You injure the second guy for $40,000. You injure the third guy for $20,000. And you injure the fourth guy for $10,000. This guy is not going to get $45,000 from your policy. The maximum he can get is $30,000. This guy is also over the limit. The maximum he can get is $30,000. These guys are under the per person limit, so he could get his 10, he could get his 20. But the problem is, we're above the limits of 60. The total claim here was 30, 30, 10, 20, so that ends up being $90,000 to be paid out. But you have a limit of $60,000 per accident. So this is where the lawyers get involved and figure out who gets paid. Then your policy would pay out the 60, so there's 30 left in damages. Their underinsured would come in and cover them under their policy. Then their insurance company would subrogate against you for the $30,000 they had to pay out. You do not want to drive with low limits, because if you hit somebody and you don't have enough insurance, they will likely get paid from their insurance company, but then they'll sue you, subrogate against you for that money. So liability pays the other guy. Let's try another scenario with these 4 people. This is a test scenario. Let's say you hit this car and you injure each person for $8,000. How much would your liability pay out? And the answer is $32,000. Because $8,000 is under the $30,000 per person, and the total amount is under the per accident. So each guy can get his $8,000, and that's under the 60 total. So liability insurance is split limit. It's $30,000 per person, $60,000 per accident, and then the property damage would fix that car. If you hit an Escalade or a Mercedes, the $25,000 is not enough to fix that guy's car, so you'll get subrogated against and they'll sue you for the amount over. In the state of Texas, liability insurance is the only required one. A customer cannot opt out of liability insurance. Every person must have liability insurance. In the real world, there's ways to get around that by like putting up a bond or having cash. But on your test, liability insurance is required. It's split limit. $25,000 property damage fixes the other guy's car. Now let's talk about the other parts of the policy. Medical payments and PIP. Medical payments and PIP on your test and as an agent, you have to offer to every customer. You must offer the customer the option to purchase medical payments and PIP, but they can opt out in writing. Liability, you have to offer it and they have to take it in some form for their policy. Whereas medical payments, you have to offer, but if the customer doesn't want to pay for it, they can opt out in writing. The difference between medical payments and PIP is medical payments only covers your medical bills if you get in an accident, whereas PIP will cover the funeral costs, the essential services, the income, and extra things. PIP costs more, and medical payments and PIP pay out on a per person basis. So like let's say you have 4 people in your car and you hit a tree. Each person can file up to $1,000 on your medical payments or $25,000 for PIP, personal injury protection. Medical payments and PIP pay you and the people in your car per person to these limits. Medical payments and PIP also cover you if you're riding your bicycle, I don't know how to draw a bike, and a car hits you. You can file under your medical payments and PIP. Medical payments under auto insurance pays you. Under property insurance, home and business, medical payments paid other people. So please make sure that you understand the distinction. When you talk about auto insurance, medical payments pays you, the passengers in your car, and if you're struck by a car. But in property insurance, medical payments will pay the other people. It's different in auto. Medical payments, again, is optional. They can opt out in writing. And in order to get this money, you do have to submit to a medical exam, and you do have up to 3 years to claim this money for your medical payments. Now let's talk about real world for a second. If a person's buying auto insurance, you can typically ask them, do you have health insurance? And if they say, yes, I have amazing health insurance, they might want to opt out of this insurance. Because the downside is, auto insurance is primary if you get in an accident, meaning that their health insurance will wait until they exhaust their auto insurance first, then health insurance steps in. So like, let's say you had $1,000 medical payments and you hit that tree. Your damage is $10,000 to you. You hurt your neck or something. You have to use up your auto insurance first, then your health insurance will step in to pay the remaining $9,000. What happens a lot of times is people get transported to the hospital, then they give the hospital their health insurance. But the health insurance denies all of the claims until you get a letter from auto saying, hey, we paid first, then you have to resubmit it back through health insurance. So customers sometimes opt out of this if they already have health insurance. Personally, I believe they should buy this just in case their health insurance lapsed or something like that. But sometimes customers do opt out of medical payments and PIP. PIP is obviously better than medical payments. Uninsured covers you if somebody hits you without insurance or if they hit you and run, or if their insurance company is insolvent. Insolvent means bankrupt. So if they hit you and their insurance company is insolvent, just like they don't have insurance, or if they have less than the state minimum. If they're driving on less than the state minimum limits, that falls under uninsured because that's illegal. You can't have under the state minimum. Underinsured is if they have not enough, but it is above the state minimums. Uninsured motorist has a $250 deductible. So no matter what your comprehensive and collision deductible is, if somebody hits you and runs or doesn't have insurance, you have a $250 deductible under uninsured. You also have to call the police to file a claim under uninsured. You have to prove that the person either doesn't have insurance or that they ran, and you have to get a police report to submit it to the insurance company. Uninsured pays you your injuries and fixes your car if somebody hits you and doesn't have insurance. Underinsured pays you and fixes your car if they don't have enough. Underinsured is a little weird. Let's say you have 100, 300, 50 limits. So you're carrying $100,000 per person, $300,000 per accident, $50,000 property damage. This is decent insurance. You'd feel okay with this. And I have state minimum. And I hit you. So I have state minimum, you have decent insurance. I injure you for $125,000 in bodily injury. So like medical bills. My policy is only going to pay you $30, because that's all I have. You'll then fall under your underinsured, because I hit you but didn't have enough insurance. You'll fall under your underinsured, but they subtract my payments from your limits. So like I hit you for $125,000, my insurance company paid you $30. The max you can claim under your policy is $70. Even though you're paying for $100,000 for underinsured, they subtract my limits from your limits. That's how much your policy pays out. Essentially, since you felt that $100,000 was enough, that's the max you can get indemnified for. Well, that leaves an extra $25,000. You'll then have to sue me personally and come after my stuff because I didn't have enough insurance to cover it and you didn't have enough insurance to cover it. It's very important in the real world to carry good limits because not only do they pay the other guy, but they also protect you if somebody hits you and doesn't have enough insurance. Typically today, I wouldn't feel safe with under $250,000, $500,000, $50,000. That would probably be the minimum I'd feel safe driving around on. I want to make sure I have enough insurance to cover the other guy. I also want to make sure that I have enough insurance to cover me if somebody hits me. And to have an umbrella, the minimum insurance you can have is $250,000. So this is the minimum required to have umbrella insurance over top of that. So uninsured covers you if somebody hits you without insurance. Underinsured covers you if they don't have enough insurance. You have to offer this to every customer, but again, they can opt out in writing. As an agent, you must offer liability, medical payments, uninsured and underinsured. They can opt out of uninsured and underinsured and medical payments, but they can't opt out of liability. That's due to something called the Motor Vehicle Safety Act. That requires all people to have liability, and as an agent, we have to offer these, but they can opt out in writing. Comprehensive insurance, also known as other than collision, fixes your car if it's a not at fault accident or if something happens to your car. Comprehensive fixes your car if it hails, or if glass breakage, or if you hit a deer, or if your car catches on fire, and if your car is stolen. Comprehensive covers you if something happens to your car and it's not your fault. If your car is stolen, you have to again call the cops, and you have to give the cops 48 hours minimum to find your car. So like if your car got stolen today, you'd say, well, how am I going to get to work? Well, you'd have to use your rental and towing, but you can't actually get the money for 2 days. Your policy pays out nothing if your car is stolen for the first 2 days. You have to give the cops 2 days to try and find your car. After that, you can start claiming under this stuff. So I guess you're taking the bus for the first 2 days. Collision fixes your car if it's an at-fault accident. So like if you hit a pothole, if you hit a tree, you hit another car, you hit a guardrail, a house, collision fixes your car if it's at fault. As an agent, we do not have to offer comprehensive and collision, but we do. But we don't have to offer it. This is what people consider full coverage. We don't ever use the words full coverage though. I'll briefly explain to you why we don't use the words full coverage. True story, not making it up. A guy buys an RV in Tennessee, and the RV salesman tells him that the RV has cruise control. It essentially drives itself. Guy takes the RV on the highway, sets it on cruise control, gets up, goes to the bathroom. RV crashes. The insurance company denied his claim because you have to be operating the vehicle while it's in motion. He said that his agent sold him full coverage and that he could reasonably expect everything to be covered. Since that was an ambiguous statement, full coverage, the customer won that lawsuit. And now a good agent never uses the word full coverage anymore. We say other than collision and collision, or comprehensive and collision. And these fix your car. The customer does not have to reject these in writing. They can just say, I don't want this, and they won't get that. Towing and labor, which is also rental reimbursement. Towing and labor is $75, tows your car. Rental reimbursement is in 30-day increments, $20 and $600. So now I just want to run through another part, then we'll go through all the slides. Let's say you borrow my car. It's my car, but you are driving it. If you get in an accident, my car insurance is primary. Then your car insurance is secondary. We always insure the vehicle's primary. The driver comes in secondary. So we might have two insurances under the other insurance provision working this out. My plan pays out first because it's my car, then your insurance comes in second. So let's try a few questions, and then we'll see, go through all the slides. So see if you can figure out this first one. You might have to pause the video. It says, T, L, and K are in vehicle 1 with medical payments of $5,000 max. Strikes vehicle 2. T is injured for $2,000, L is injured for $4,000, K is injured for $8,000. How much total will the policy pay out? And the answer is 11. Because medical payments pays out per person, and it pays out the people in your car. So since it's T, L, and K who are injured, 2,000 is under the 5,000 max, so T gets his money. 4,000 under the 5,000 max, so L gets his money. 2 plus 4 is 6. K is injured for 8, which is more than 5, so K only gets 5. So 2 plus 4 plus 5 ends up being 11. That's the first one. The next question is, all of the following are not covered under Part C uninsured motorist, except. And the answer is a hit and run. This is a question with double negatives, so they cancel each other out. And the question's really asking you which of the following is covered under uninsured motorist. An uninsured motorist covers hit and runs. Striking an elk falls under comprehensive. A person with less than enough limits is underinsured. This one's uninsured. Flying debris is comprehensive. That's like a glass, a rock that hits your glass. So the answer is A. That's the one covered under uninsured motorist. Let's see if we can do the next two. Or just this one. J has 30, 60, 25 and allows T to borrow his vehicle. T has 100, 300, 100 under a personal auto policy. T hits K for 80. How will this claim be paid out? And the answer is D as in dog. J's car, since it's J's vehicle being driven, J's policy pays out first, the 30, and then K's the other money comes from T, who was driving the car. So 30 plus 50 equals 80. The vehicle being driven is primary. T is secondary after that. You've learned most of the stuff in this chapter. There's a few more things you have to learn, but we're going to go through all the slides very quickly now. So, in order for it to be personal auto insurance, the vehicle has to be under 10,000 pounds and have 4 wheels. Motorcycles do not get personal auto insurance. They receive something called miscellaneous coverage. So to be a personal auto policy, it has to be under 10,000 pounds and have 4 wheels. Sometimes your test uses tons. There are 2,000 pounds in a ton. So like any vehicle under 5 tons can be personal auto, because 5 times 2,000 is 10,000 pounds. So you might see a ton on your test, and a ton is 2,000 pounds. Farm vehicles also qualify for personal auto because farmers use their cars on the farm. If you ever rent a vehicle, like a budget or enterprise rent-a-car, your auto insurance can work in most states. So usually you do not have to purchase their insurance if you have comp and collision on your policy. We also use temporary substitutes under auto insurance. A temporary substitute is a loaner vehicle while your vehicle is being repaired. A temporary substitute, that's the exact definition, and it is on your test. If you drop your car off to get it fixed, and the dealership gives you a loaner car, not a rental car, nothing you paid for, but something that you just borrowed while your vehicle was being repaired, that's a temporary substitute. It's also covered underneath your auto insurance. If you use the vehicle for business purposes, that's not covered under personal auto. That falls under commercial auto, business auto, which is at the end of this chapter. Carpools are okay, but public liveries, which are taxis, are not covered under personal auto. This goes under business, but you can carpool. If you drive through multiple states, your policy changes with the state that you drive in. So like the Texas minimums are 30, 60, 25. If another state has higher limits required, your policy automatically bumps up to that new state. So you can drive in every state and feel safe because your policy automatically changes. Auto insurance, you can drive your car in the USA, Puerto Rico, and Canada, but if you take your car down to Mexico, you have to buy Mexican insurance. Auto insurance uses sex for rating purposes. Women typically receive lower rates than men. Driving records and physical inspections are used under the Fair Credit Reporting Act. These slides go very quickly. People who are considered covered, anybody who drives your car is an insured. So like if you give your keys to a homeless guy or a drunk best friend, they get in an accident, your car insurance will cover. Medical payments, uninsured and underinsured, cover you if you're struck as a pedestrian. Comp and collision fix your car. Liability pays and property damage pays the other guy. Unlicensed drivers are covered under your auto policy. So like if you have a 15-year-old at home and they drive your car, even though they don't have a license yet, they are covered. But if it's a suspended or revoked license, they are not covered because they're not legal to drive. They got that removed. So pretty much anybody that drives your car, unless they're violating the law, is covered. If you ever get divorced, your spouse is covered under your policy for 90 days or until they get a new policy, or if your policy expires. So your spouse is still covered underneath your policy until either they get insurance or your policy ends, or for a maximum of 90 days. If there's two policies, the vehicle being driven is primary. This stuff's not very important on the test. I'll just talk about it. If you buy a new car, your policy automatically covers the new car for liability for 30 days. If you have comp and collision, your new car gets it for 14 days automatically. If you don't have comp and collision, if you only have liability, then the new car is covered for 4 days automatically for free with comp and collision. There's a $500 deductible. So like if you ever buy a new car on Craigslist or something like that, you can feel safe driving it home because you automatically get comp and collision for that car for 4 days. Or if you have comp and collision, you get it for 2 weeks. So you can feel safe pretty much buying a new car. But you do have to have insurance. If you don't have insurance, then there's no coverage here. This one doesn't really matter. This one doesn't really matter. This one does matter. Supplementary payments are essentially legal fees. Supplementary payments apply to liability insurance and are covered for free above the limits you purchased. So for example, let's say you have 100, 300, 50, and you hit a guy and the insurance company doesn't want to pay. They want to fight it. So the insurance company hires a lawyer, and the lawyer costs $40,000. And they lose. Your policy will pay the guy you hit the 100 and the $40,000 lawyer fees. Supplementary payments are in excess of what you bought because the insurance company gets to decide whether or not to defend or to pay out. They don't ask you in auto insurance, should we pay out? They make that decision. And since the insurance company decides to hire the lawyer, they have to pay for the lawyer. Supplementary payments, they'll pay you $200 a day to go to court to help fight it. If you need a bail bond because of an accident, that'll pay up to $250 for it. Non-owned trailers, you get a trailer that you're towing, you're covered for $1,500. These are free coverages, primarily lawyer fees, that are covered in addition to your limits. If the insurance company loses and they decide to appeal, supplementary payments will cover any interest or appeal bonds or any of that stuff. Supplementary payments are the legal costs in a policy. This is guaranteed to be on your test. Most people forget about supplementary payments, and supplementary payments are legal costs in addition to your limits. They're covered for free. You don't have to pay. But that's because you didn't get to choose the lawyer. And the insurance companies will choose a good lawyer if they have to defend the lawsuit. If you ever get in an accident, make sure you don't say it's my fault. Let the insurance company handle it. If I ever get into a bad accident, I will not talk to anybody until I talk to my insurance company and my attorney. This slide doesn't really matter. Neither does this slide. Let's talk about medical payments again very quickly because it's important on the test. Medical payments pays up to $1,000 per person in your car, regardless of fault. So like if you hit somebody or somebody hits you, you can collect under your medical payments. It also applies if you are a pedestrian. Personal injury protection covers up to $2,500. It'll cover your medical bills, your funeral costs, your income, even things to like have a dog walker. Personal injury protection is better than medical payments, but it costs more. This again pays you and the people in your car. Uninsured motorist, if you are hit and run. Uninsured motorist, if they don't have insurance, or they have less than the state minimum limits, or if their insurance company is insolvent, bankrupt. there is a $250 deductible for uninsured motorists, and you have to call the cops. Underinsured motorist is if they don't have enough insurance. It'll pay up to the limit that you purchased. Comprehensive, also known as other than collision, fixes your car if it's not your fault. If your car gets stolen, you have to give the cops 48 hours to find your car. Comprehensive and collision have deductibles, and deductibles are met per occurrence. We talked a little bit about that earlier in a previous chapter, but deductibles are met per occurrence, and auto insurance uses actual cash value, meaning that depreciation is factored into the actual price. So if you have a brand new car worth $30,000, then you put 10,000 miles on it, that car is only going to be worth $20,000. Car insurance does not use replacement cost. Car insurance uses actual cash value, factors in depreciation. Collision fixes your car if it's your fault, so like hitting a pothole or anything. Collision also has a deductible. These are things that are not covered under auto insurance. If somebody steals things from within your car, things that are not permanently attached to the car, that goes under homeowners insurance. So like let's say you have your car in a parking lot and somebody breaks the window and steals your laptop. The broken window falls under comprehensive. The laptop falls under homeowners insurance because homeowners insurance insures your stuff. If they steal your radio, that falls under comprehensive because that's permanently attached to the car. If it's permanently attached to the car, that's auto insurance, but if it's regular things, that ends up going under homeowners insurance. If you tow a trailer, your trailer's covered automatically up to $1,500. If you ever get a custom upgrade, you have to update your insurance. This stuff's relatively simple. We'll just briefly mention it. You have to notify the insurance company within 30 days whenever you have a claim. If there's a hit and run, you have to call the police. You have to protect your property. You have to allow the insurance company to inspect the vehicle. Everything's done in writing as well as proof of loss. And if you have a suspended license and you get in an accident, you're not covered, just like revoked license, because those people are not legal to drive. So that's the end of the personal auto, but we still have commercial auto coming up. Commercial auto is relatively simple on this current state test. Business auto insurance is for vehicles over 10,000 pounds or vehicles used for business purposes, like a taxi. This encompasses garage keepers, which are auto dealers. This encompasses contractors' equipment, so like a backhoe being driven on the road. This encompasses truckers, so like the big semis, the 18-wheelers. Business auto is for vehicles used in a business purpose. And business auto insurance uses combined single limit. Most commercial auto policies are $1 million and above. You can get lower, but honestly, if you have a business auto, you should have at least $1 million in coverage. A lot of truckers get $5, $10, $20 million policies. Let's quickly talk about the truckers, though. Truckers insurance, as of 1980, is known as the Motor Carrier Coverage Form. This is the new name of truckers insurance. Motor Carrier Coverage Form. There's three kinds of truckers. There's common carriers, contract carriers, and private carriers. Common carriers will transport anything. That's like UPS, FedEx. Anybody can put something on a UPS truck, transport it around. Common carriers are the most dangerous, and they cost the most amount of money to insure, because they have no idea what they're carrying. They could have a bomb, they could have flammables, they don't know what's in the package. They're just carrying whatever somebody pays them for. So under the Motor Carrier Coverage Form, common carriers are the highest risk. Contract carriers are a little bit lower risk. They only carry goods for things that they have contracts with. Grocery stores. Their truckers usually know what's in the back. Groceries, food, produce, things like that. But those trucks only carry for the people they have contracts with. If I call up Walmart and say, hey, can I put something on the back of your truck? They'll say no. Private carriers only carry their stuff. Private carriers are the safest, and they get the lowest premiums because they know every time what's in the back. They don't have to rely on somebody else putting it in the back of their truck because they put it there themselves. That's like a furniture dealership or like a Napa Auto Part, little trucks that carry stuff from store to store. Private carriers are cheap truckers insurance because they're relatively low risk because they know what's in the back of the truck. So truckers insurance is now called Motor Carrier Coverage Form, and that covers all truckers. Different policies cost different prices. A garage keeper is an auto repair shop, a dealership, or a valet service. Anybody that sells, services, and stores vehicles is known as a garage keeper. So like Jiffy Lube is a garage keeper. An auto dealership, garage keeper. The valet guy, garage keeper. A garage keeper is anybody that deals with cars. So business auto is for bigger vehicles. It can be smaller, but anything over this has to end up business auto. It also covers truckers. It also covers garage keepers. Just like auto insurance, if you get a new vehicle for business or personal auto, you automatically get coverage for 30 days. We like it when people buy new vehicles. They have 30 days to call up their insurance company and add it on there. This is probably the only real important thing from this chapter that's on your test. Business auto has endorsements. The drive other car endorsement is if your company gives you a take-home vehicle. So that's like for pharmaceutical sales reps. If your company gives you a company car, they will endorse that under the drive other car coverage. That allows the employee to take the company car home and use it in personal use. The drive other car coverage is the type of insurance the business buys to allow the employee to take the car home and use it for personal use. Construction people use this a lot because they get a company truck that they get to take home. Cops drive the car and then they take it home and get to drive it around the neighborhood and stuff like that. Drive other car is what the business carries to allow the employee to take the vehicle home. But if the employee is using their car, then the business can buy employees as insureds coverage. Employees as insureds coverage is what the business would buy so that you can use your car for business uses. And then if you get in an accident, the business policy kicks in instead of your car insurance. My wife used to work for the state of Texas, and she would transport children back and forth to visits. She used her SUV while transporting. The state of Texas has employees as insureds coverage. So if she got in an accident while she was working with the kids, the state of Texas's insurance would kick in, not our insurance. If you have an employee that runs errands or makes bank deposits, and you want to make sure that they're covered if they get in an accident, then the business would purchase employees as insureds coverage to cover that driving. If a contractor wants to drive their stuff on the road, like a bulldozer or a backhoe, the contractor can buy something called mobile equipment. If you ever see the words crawler treads are like tank treads. That's like what a crane rides on. Crawler treads, bulldozers, backhoes. A backhoe it has a bucket on the front to scoop, and then it has an arm on the back to dig. This is all contractors' equipment, and that falls under mobile equipment. These will likely be on your test. They will say, so-and-so's company provides them with a company car that they take home. The company has driver of the car. If you use your vehicle, that's employees as insureds. And if you have contractors' equipment, then that's going to fall under mobile equipment. That allows you to drive that on the road. It doesn't mean it's legal. That just means you're covered if something happens to the equipment. This next slide is on the test, but it's not very difficult. Owned autos are any vehicles that you own. Non-owned autos are any vehicles you don't own. Hired autos are things that you pay for. All hired autos are non-owned, but not all non-owned are hired. I'll give you an example. Let's say you own a business and you need to rent a truck from U-Haul. Since you paid for it, that'll be a hired auto. But you also don't own it, so it's also non-owned. Now let's say the business uses the employee's pickup truck. That's going to be a non-owned vehicle, but not hired, because you didn't have to pay the employee to use the pickup truck. Hired autos are when you pay for it. You still don't own the vehicle. So businesses can choose to only cover the vehicles they own, or they can cover any vehicle, whether it's owned or non-owned, or they could choose owned and only hired. These are just different elective coverages that the businesses can choose. If you only get owned autos, that's the cheapest. If you only get hired autos and owned, then it's a little bit more expensive. And then if you get non-owned, it'll cover pretty much any vehicle that you drive. That's the most expensive because it covers everything, owned and non-owned. Not super important on their test, but if they do pay for it, remember that's hired because they had to pay for that vehicle. These are not important on your test. I'm just going to briefly touch them, but not important on the test. Commercial auto uses symbols to decide which coverages to get. A symbol 1 is the most expensive business auto because it'll cover every vehicle that the business drives. They get liability insurance for everything. Symbol 7 is typically what businesses do. That's known as specifically described autos, where you have to list each vehicle on the deck page of the policy. So usually when you're writing business auto, you either do a symbol 1 or a symbol 7. Symbol 1's expensive, but the business can drive any car covered. Typically businesses are like, well, we don't rent anything and we don't use employees' vehicles, so let's just do a symbol 7 and save some money. And they're only going to be covered if they're in an accident with the vehicles listed. Mobile equipment falls under symbol 19. Garage keepers have their own symbols. So like dealerships are symbol 31. That allows the dealer to have dealer tags. They can have 2 dealer tags. Then they have to add more onto it. But symbols, not important on the test. Garage keepers insurance, we've kind of talked about. It protects businesses that sell, service, and store vehicles. That's like Jiffy Lubes, dealerships, stuff like that. If a garage keeper messes up, like Jiffy Lube installs something wrong, the garage keeper's insurance will kick in. This isn't just auto. It covers the whole business. But it will not cover any recalled products of the garage keeper because the garage keeper didn't make the product. They just installed the product. So this never falls under garage keeper's insurance. Truckers is also known as motor carrier coverage form. We've kind of already talked about that. Truckers insurance you can also buy as an annual transit or trip transit insurance. This is not very important, but annual transit covers the trucker for the entire year. So they can go anywhere across the whole United States. Trip transit is insurance that you buy just for one trip. So like if you need to rent a 18-wheeler to move your office, then you might just get trip transit insurance, cover you for that one trip. Most truckers, which is the motor carrier coverage form, gets the annual transit coverage. Anyway, The commercial auto chapter is not a big deal on your test. As long as you focused on the endorsements and you got the gist of this and you kind of knew what a garage keeper was, you'll get most of the questions right on your test. Personal auto insurance, you're going to want to make sure that you know all of the parts to the policy. The liability is required, pays other people. This stuff pays you. Medical payments, PIP, uninsured, underinsured, we have to offer to people, but they can opt out. As long as you understand this and you understand supplementary coverages, you'll do extremely well on the auto insurance chapter. But good luck on your practice tests. We'll see you in the next chapter.